for. I'm of an age where I don't actually need to make a whole bunch more money, but I like making money. So in the speculative part of my portfolio, I look for tier one managements, tier one deposits in a microcap wrapper. And I look for something where an existing discovery or discoveries takes care of the valuations 3 years from now and 5 years from now. So one example in terms of speculation would be Africa Oil, one of the Lundin Group companies. Operating in Africa, they made a discovery, almost 15 years ago now in Kenya, which remains undeveloped because of low energy prices during part of the time and because of the Byzantine nature of Kenyan politics. They cruised on from that at the bottom of the oil market to buy the big Brazilian company Petrobras's Nigerian offshore assets. And to say that they bought it understates it. They stole it. And at the same time hedged out the production so that the COVID-related sell-off didn't impact them. I believe that based on the Nigerian producing assets alone, that the company is selling at half its net present value. But Nigeria has a whole bunch of exploration upside that wasn't exploited by Petrobras because they use the Nigerian assets as a piggy bank. They cash starve them. At the same time, in the last 2 years, Africa Oil has participated in two major frontier discoveries, one offshore Namibia, reputed to be 3 billion barrels of oil, and another offshore natural gas in South Africa. So I look at something like Africa Oil. They're fantastic people, the Lundin family. The CEO there, Keith Hill, I've known for 30 years. He's a superior human being. I think it's selling at half the value of the Nigerian assets without any upside attributed to the Kenyan assets or the exploration upside in Nigeria. And I think it discounts completely the participation in successful exploration in two world-class deposits. Yes, there are risks. I mean, South Africa is a harsh place to invest. Namibia is a good place, but most people can't spell it, so they don't like investing in places they can't spell. Nigeria has been a very, very, very difficult place to be a foreign investor. And the political reality in Kenya is such that politics has gotten in the way of opening up a billion-barrel field. So yes, there are risks, but when I juxtapose the risks against the insane rewards, that's pretty attractive. So that would be, one example of something that I find fairly attractive. In a different part of my portfolio, I believe that the gold price is going higher. I believe that the winds are in gold sales. That would be another whole interview to tell you why. But I want to increase my position in gold. And one of the things that gold does in my portfolio is it performs, among other things, an insurance company, which means that unlike Africa Oil, which is high risk, I want some low risk gold. To me, the lowest risk gold is Franco Nevada, the royalty company. Very high quality assets, very long reserve life, very low management expense. It's simply the highest quality gold company in the world. And I like the fact that it isn't cheap, but I think it's reasonably priced relative to their margins, relative to their production growth, relative to their assets. So that's appealing. That's appealing to me. I could go on and on and on and talk my book, but it's all getting more attractive.
Thank you for that. What about some oil and natural gas companies that are maybe slightly larger cap, definitely not the majors, something like Southwestern Energy or Cheniere? I guess Cheniere is very big, or Baytex or any of the other Canadian ones.
I continue to have a basket of Canadian names in my portfolio because the Canadian companies are less expensive by similar metrics than their American counterparts. They're more expensive because the political risk is even higher. It doesn't matter that Mr. Biden, well, it does matter, but Mr. Biden is anti-Canadian oil, but Mr. Trudeau is also And the consequence of that is that Canadian companies are irrationally cheap relative to their assets. I like higher quality but smaller names there. Names like Freehold, names like ARC, which I think is the best run mid-cap oil and gas company in the world. Names like Tourmaline. I continue to like the gas-rich Canadian names, Tourmaline being one of them. But Peyto and Birchcliff probably being more important. I'm less attracted to them than I was a year and a half ago, where I just said, this sort of six stock portfolio is a no-brainer. A portfolio that's up 150% in a year and a half is no longer a no-brainer. But the price action in the oils in the last week is attractive.
Yes.
It might become a no-brainer again. And I would suggest to those of your listeners who don't have oil stocks in their portfolio that even after the whole oil complex is repriced better than any other sector in the economy, that there's room left. The public opinion with regards to oil is so low that they are treating it unbelievably low multiples to cash flow. I mean, I do believe that markets work. I do believe that a business like the oil business that has 50% operating margins at the field level is ripe for a decline in price. But it isn't ripe for a decline in price while the industry as a whole is still deferring $1 billion a day in sustaining capital investments. If we solve the problem with Russia and the Ukraine in the near term, and the threat of a cutoff of Russian oil and gas to Europe is solved, I think that you'll see the oil price go very quickly to $60. But I don't think it'll stay there.
Yes. Well, that's exactly what happened in 2008, right? The oil price collapsed, but by 2009, it was higher.
So, I think it really depends on what kind of investor you are. If my basket of oil stocks in the near term from here fell by 50%, I wouldn't be happy about it, but it certainly wouldn't be the first time in my career that a basket of stocks that I owned for the 5-year term fell by 50% in the near term. Mercifully, I can tell you that after not having invested correctly in my 20s, ever since then, when I've had a conviction in a sector and I've been wrong in terms of time, I bought more, and it's worked for me.
Is there any sector, it sounds like it's not oil, natural gas, but is there any sector where you are thinking of you have overstayed your welcome and you want to ring the register, maybe in those more economic sensitive areas like iron and copper, or if not, then perhaps others?
I've already rung the bell on iron. I'm gone. That's probably a mistake. It really probably is a mistake. But when I look at iron, I don't want to be involved in the wholly iron dependent names anymore. I think that I can get iron exposure reasonably enough by owning Vale, which I also own for nickel and platinum, copper, cobalt, names like BHP, names like Rio. So I no longer own the Labrador Irons, the Fortescues. I no longer own the focused iron producers because I'd rather get my own personal iron exposure in multi-commodity companies that I think are misunderstood and cheap. As I told you, I rung the bell myself in the junior uranium sector in a big way. Now, I must admit, I didn't exit uranium. I took the money from the uranium juniors and I bought our product, the Sprott Physical Uranium Trust, because I believed that the uranium price had to go up. And I didn't think that uranium was overvalued, although I believed the juniors to be overvalued. One thing I did, which for various reasons I regret, is when it looked like we were cascading to war, the cheapest resource stocks in the world were the Russian stocks. And I began a process of fairly aggressively buying the Russian stocks. Two circumstances there. One is the moral circumstance. Do you want to be involved in an industry that's generating tax revenues for Mr. Putin? The answer to that is probably no. I didn't understand that the world would be dumb enough to go to war. The different question, of course, is the political risk around sanctions. In other words, will my government continue to allow me to own those stocks? And will the Russians allow me to own those stocks? If I followed my own historical guidelines, I would open an account with Gazprom Bank in Moscow, and I'd buy a bunch of Russian stocks, partly for moral reasons and partly for practical reasons. I haven't done that yet.